Over the past few years, words such as Bitcoin, Ethereum, DeFi, crypto, and NFTs have entered the everyday lexicon for many individuals. People are flocking to the masses to learn about this new industry that is revolutionizing almost every single industry within the world. Imagine tech in the early 2000s. Not only are people entering it, but so is the amount of capital. Trillions of dollars have been invested over the past few years to really work on this revolutionary technology. And behind the money comes the intelligence as well. Individuals with their cushy jobs in traditional finance, in VC world, are leaving that to go to the high tech and really exciting world of DeFi. Now, not only is it exciting, but also the amount of businesses being formed are becoming much more legitimate every year, with more traditional roadmaps that a traditional investor can get and bite their teeth into. Today we speak with Brian, the CEO of ETH Capital. We really go over his story and how he entered the whole DeFi market and really how he got bitten by the bug. Like many others, the story is quite interesting and funny at times. Not only that, we speak about really how to evaluate this whole world. In traditional world of tech, you might see a business that could, reach $100 million market cap or really revolutionize $100 million industry. In the DeFi world, we're talking about the T word. We're talking about possibly $1 trillion disruptions. So how do you look at a project to know if it's a complete rug pull or there's a legitimate business behind it? Like many others, it's a guessing game, but there are some key things to look out for to really ensure that the industry can progress and really have a more realistic view on the world. Hopefully, you guys enjoy this episode. Please subscribe and really follow along this podcast to learn how the world of DeFi can not only revolutionize the industry you may be working in, but can revolutionize what we consider to be a standard world in the next 5 years. Hopefully, you guys enjoy.
My name is Brian Mosoff. I'm the Chief Executive Officer of Ether Capital, and we're a publicly listed company focused on the Ethereum ecosystem and infrastructure surrounding it. We've been public since, spring of 2018.
And obviously, the DeFi space is very hot right now, especially more and more traditional investors looking into it. How did you get it? How did you get involved in the industry? Because I always feel that introduction is always an interesting story. It's never a straight line. It's never my parents did it, so I did it too.
This is definitely not a my parents did it kind of story. It's still my parents think I'm crazy, but less now than they did, in the early days. In 2012, I was helping a friend buy a used iPad off Craigslist, as one does, and we drove out to the Craigslist person's house, and he was selling all of his possessions, not just an iPad, but his car, his house, his I don't know shirt off his
Mhm.
back for something called Bitcoin. And he was telling us a little bit about it, and my friend and I looked at each other and thought he was absolutely insane. And we left there thinking, nice to meet you. Never heard of this Bitcoin thing, but good luck with that. And my friend who had he was an economics major,
Mhm.
and to him it just sounded way too crazy, and too crazy to the point that he didn't want to do any of the homework on it. And I guess I was stupid enough to decide to go and read about what is this Bitcoin thing. And I've always been into anything tech since I was a kid. And fast forward, I read it, I clicked around, I probably skimmed through the white
Mhm.
paper, maybe read a couple things on Reddit, and also just thought, I don't really get it. I don't see why this is valuable or what this is, but fine. Put it in a drawer, and a number of months later, in early 2013, if you lived on Reddit, as I do, I live on my computer
Mhm.
basically. It would continually pop up on the front page, and so I eventually went back to it and started reading more. And there was a very passionate community of developers and people talking about monetary policy and distributed computing science. And this is 2013, so it's really just Bitcoin. There was Litecoin and a couple other things at this point, but it really was just a Bitcoin world. And I got sucked into the community because it seemed like they were rallying around something that was to them very important and very transformational to the internet. And by summer, I was chatting with close friends of mine from high school who were also very techy. We were, the Comtech club,
Mhm.
if you could call it that, in high school, and really just fell down the rabbit hole then and became obsessed with reading about it and trying to learn everything I could. I discovered Andreas Antonopoulos, who was putting out really thoughtful content and making it digestible to people who weren't programmers or good programmers. And I really fell down the rabbit hole first through Bitcoin, and everyone around me thought I was insane. I think what was tough socially back then was there was no one to validate your ideas. There was no one in your network who had heard of it. Um, you were that early adopter, but with no one else to bounce research off, really, other than I had one or two friends, and that made it harder to make an investment and to decide to go deep into the space. And I became part of the Toronto meetup scene, which was really just 10 people going to a couple bars.
Hmm.
Eventually, Anthony DeOrio had a house on Spadina, a major street in Toronto,
Hmm.
where he was trying to bring together people in the community. And Vitalik was there, and the idea of Ethereum started forming, and the rabbit hole just kept getting wider and deeper. And then by 2018, which is still a number of years later, it became my full time, and this is it.
That that, like you said, that's a very interesting story, especially with finding the iPad, kind of getting introduced. This I always find that introducing to DeFi world always is a unique story because it's always that crazy person initially, especially in your like 2011, 2012 when it was coming up. It wasn't the most. You speak to anyone who knew about investing back then, they're like, this makes no sense. Like you were saying, if you knew economics, you're like, you need a group of people to agree on something. How do we get buy-in? We've seen this on a macro scale many times fail, but obviously now it's a shining example of kind of what tech can do. And I even had a similar story. I think it was in I was in high school at the time, and when my friends wanted to take 5 grand he had from bar mitzvah money or something and put it into Bitcoin, and I think it was $8 or $1 at the time, and we're like, and I was very techie back then. I'm like, I don't know how to buy this. I'm not sure where. Also, I don't have a credit card. I'm like 17 at the time or however old I was. But then he was like, you know what? Nah, I talked to him a few years after. I'm like, oh, did you ever do it? Because it went to like $10 or it was hitting triple digits. He was like, no, whatever. Now looking back, that's our favorite story to bring up. Like everything else, FOMO is always more exciting to talk about because it's easier to see than the ones you didn't invest in and didn't go successful. But very
And
similar story where it was just someone who was really passionate about it early on in the
and that
days.
and that kind of translates to where we're at today, where people aren't sure
Hmm.
if this should be a thesis bet with a long-term,
Hmm.
low time preference, or it's a FOMO momentum trade. And you know this because a lot of people say, is it too late? Is now a good time to buy? And you're basically describing the same thing, that someone
Yeah.
looked at the asset at $2 or $8, $10, $100. And the question still is today, even at 30,000 US or whatever the price of Bitcoin is this
Hmm.
hour, um, where in 5 years, the real question is, where in 5 years is this asset? Is
Hmm.
the world moving more towards decentralization and peer-to-peer network-based models? Or is this an experiment that's over? And if people think that the world is moving more to these peer-to-peer networks, these more mesh network-like ways of doing things, the way Uber and the taxi industry disrupts, Uber disrupts the
Hmm.
taxi industry, and Airbnb disrupts the hotel industry, and now you've got software that's disrupting monetary policy and competing with the Federal Reserve and central banks. If you agree that that is a trend that is likely to continue, that is a reason to be bullish on the asset class and to be long, but with a low time preference. So
Hmm.
a lot of people get caught up with the headlines of, this week Bitcoin's up 12% and then it drops 20%, and they get stuck on the volatility
Hmm.
without thinking that long term, where is the world moving? And is this appropriate to include in a portfolio? And the answer, I would think, for most people should be yes, because they see what's happening. You and I were talking before
Hmm.
we started recording and agreed that the amount of intellectual capital that is moving into the space is unprecedented. I mean, I've been meaningfully tracking the space since 2013. I've never seen anything like this. People leaving their banking jobs, people leaving, traditional finance and lawyers, and people
Hmm.
joining the industry because they're drawn to it intellectually. They're fascinated by it. They see a very wide design landscape
Hmm.
of things that need to be built, and they could bring their expertise from TradFi
Hmm.
and apply it into crypto. And that mind share is going to create some really powerful infrastructure, tooling, and new opportunities. What exactly they look like, I'm not
Hmm.
sure, but the industry is bigger now than ever before. And that's, I think, a reason to have a lot of confidence that the space is here to stay in 2020, when There was that March, I can't remember if it was the 18th, the 20th,
Mhm.
whenever the OPEC oil crisis sent the market down, 15 or 20% in a day, and Bitcoin and Ethereum are down 48 or
Mhm.
50% overnight. That didn't send the asset class to zero. In fact, it proved how resilient it was, that it didn't die. There was enough liquidity to support
Mhm.
these exchanges. And then it came back, bigger and stronger than ever. And it woke up a new investor class to this idea that software or algorithmic monetary policy is worth considering. And that group of people may have written off the asset class before. So I think that there's a lot of reasons to be bullish now
Mhm.
and still understand that there's asymmetry in the bet. So,
Yeah.
long story way of saying your friend who didn't buy at $8 or $10, he still can get in today.
Mhm. Oh, I think for sure. I think that's the one thing that, I mean, that's what's really interesting. Like you were saying, I have a lot more of my friends, whether they're in banking, quants, working at some of the largest banks now, moving into this space. It was very interesting to see. Like I was always asking them, like, why weren't you interested before? I kind of, what was that stepping point? A lot of them was that, well, now that there is more of a structure, I think that's one of the challenges that we can talk about a bit is that initially especially with even tech a few years ago, the evaluations were wild. People were, saying Snapchat, how are you worth so much money? All you do is add filters, add a dog face to a person. You have Twitter, all these businesses that were cash flow negative or at least running at a loss, being worth billions of dollars. And then you had then DeFi, which was to similar extent a lot more speculative, but also at 100x the multiple sometimes. So I think now that there are more foundation and structure coming into the industry, people who have run organizations, at least in traditional finance, moving in, a lot more people I feel more confident in trying to build out more of, like you said, an ecosystem around more products and tools within this space, which is going to be super interesting, especially when you learn how much money people were making before and moving into this space. It's always great talking to a friend maybe in college who had no options and started a business, and you're like, well, okay, but then you're someone making seven figures saying, I'm going to drop everything to get into this space, opens up your eyes a little bit more when you realize they had options and they're choosing to pursue a career within this industry. So well, I mean, that's an interesting topic. How, because obviously it's still a little speculative around where we think it's going to go, and obviously how big it's going to be. How, when you're looking at whether a project or something else, how do you evaluate it then when it's, like you said, a little bit, a lot of noise in the market?
It's really hard to understand the models, I think, of some of these projects, and a lot of things are very experimental. We're still really scratching the surface of
Mhm.
how blockchains and tokenization are going to remove agency and centralized businesses. And we're actually even seeing
Mhm.
the battle between these two worlds, right? You're seeing the true DeFi, and DeFi, by the way, can mean a bunch of different things. Someone might just call Bitcoin in general DeFi because it's not controlled by any central authority. In my head, DeFi usually means on-chain trading, insurance, derivatives, options, that kind of stuff. But it could be a spectrum of things. And when I think about the access points, you're even seeing right now the Uniswap versus Coinbase battle going on,
Mhm.
where in the early days of Uniswap, and for those who don't know, Uniswap is a way of trading any crypto asset, although typically in the Ethereum ecosystem natively, um, without a centralized counterparty like a Coinbase or an FTX or an exchange. And in the early days of Uniswap, the volume was very low. Maybe it was doing $1 million or $2 million a week, and it ramped up really fast. And you saw by the latter half of, I think, 2020, Uniswap was trading a few $1 billion a day, moving through this decentralized exchange, which is the same amount of volume that Coinbase was doing.
Mhm.
That is an enormous number to see that a protocol, a piece of
Mhm.
code that lives on chain, is now competing with a centralized business. So I think it's hard to get a sense in the early days how big some of these protocols can be. We think that something like Filecoin, decentralized file storage, or Filecoin's technically the
Mhm.
incentive layer on IPFS,
Mhm.
um, that could be a multi-$100 billion business, even though it's not a business per se, but it has the potential to disrupt, the Dropboxes of the world.
Mhm.
And it's so hard to know early on um, how to value these things appropriately. And I think that that's why you're seeing out of the gate, they have high valuations because people assume that the asymmetry is just so high. Because if they can achieve what they're proposing, the sky's the limit, the same way that Ethereum, that wants to kind of
Mhm.
tokenize or capture all of the world's economic activity and make it programmable on chain into this global settlement layer. That's not a $10 billion thing if
Mhm.
it succeeds. It's not a $100 billion thing if it succeeds. It's a many, many, many multiple $1 trillion
Mhm.
asset if that actually is true. How you value it along the way, I don't know. It's it's very difficult,
Mhm.
but I think that that's why you see a lot of people writing big checks, or as we were saying earlier, giving these projects very high valuations up front, even though there may not be users yet. They see the potential for how that exponential part of the curve,
Mhm.
how fast it can come if users start to adopt
Mhm.
any of these protocols. So I actually don't have a good um, analysis for this. The last thing I would say is a lot of people talk about DCF models
Mhm.
in something like Ethereum, and I struggle with this because if you think about DCF,
Mhm.
um, uh, it doesn't it doesn't take into account these external factors that can meaningfully move the price. And the example I give of this is in early 2020, you have ETH at, I don't know, $80, $100, $130. This is again before that OPEC
Mhm.
crisis. Or no, I guess it was like $200 because then it drops
Mhm.
100
Yeah.
$100 in the 50% drop. But my point here is that let's say you had a DCF and you had a model that had a whole bunch of factors to try and figure out the correct price of Ethereum.
Mhm.
And you decided I was going to buy or I wasn't going to buy or trade based on that model. Would that have predicted the OPEC crisis? Probably not. Would it have helped predict that verticals will emerge around DeFi, NFTs, the metaverse? None of those things are going to be factored into that model that sent the price of ETH from a couple $100s to,
Mhm.
4 to 6,500 was maybe the high, whenever that was. That's not going to be in the model. And that's what bothers me, because you can try and figure out to the dollar or to the $10 what the price of ETH should be at any point in time and say, here's how we're going to try and model something or value it. But it's probably not going to factor in all sorts of things. Is going to factor in, you know, um, a hack that takes place on a bridge or in a certain, I don't know, DEX that blows up hundreds of millions of dollars at a single point in time. It's just not going to do it. So maybe there's an application for DCF that I don't think about because I'm not a trader, I don't run a quant. But in general, to me, the best way to play this space is still find the high quality assets that are going to act as the base layer to all sorts of activity, and then just be long that asset and remain focused and have conviction that long term that will be an important piece of infrastructure to these protocols and to the asset class, and ignore all the fluff and the hype and the daily news.
I think what you touched on is something I always heard from a lot of great, even tech investors around the idea is that, especially when you're trying to even work with a lot of startups, when you're trying to raise funding, the question everyone always has to answer is, if you're successful, are you solving a $100 million industry? Are you solving a multi-billion-dollar industry? And I think what you said is the key there is that, sure, I mean, no one can predict anything, but if you're in an industry where if you are correct, trillions of dollars, that is where you can say, you know what, there is obviously everything's a risk, but if this one wins, the upside is so much larger just because of the industry you're working in. I always think that is something that plays such a big factor, even in traditional VCs when you're starting your own business, is that, hey, are you just trying to, if you're a dog walker, making a dog walking app, the classic example everyone uses, you need so many humans to do it. There's so much scalability. But if you can disrupt a multi-trillion-dollar industry, well, even if you get that 1% of it, you're worth more than anyone ever predicted. So I think that's always an interesting thing, is like, what is, like you said, what is the long form disruption this could bring, or at least what is the upside potential?
And on that, just
Mhm.
to add one point, if you think about the two assets that are the biggest by market cap,
Mhm.
Bitcoin and Ether, are objectively the kind of worst pieces of tech that are out there.
Mhm.
Bitcoin is really slow, right? 10-minute block times. Ethereum is 15 seconds. It only has so much throughput, high transaction fees. But there's a reason that they are the two biggest, and that is that they are the 0 to 1s, to borrow
Mhm.
the Peter Thiel book headline here.
Mhm.
Bitcoin invents the asset class. Ethereum invents a smart contract platform narrative. And I think that that helps frame a lot of people who are stuck in the hype around this thing is going to be an ETH killer, right? You
Mhm.
would hear that in 2020 and 2021 headlines of whatever is going to be the next Ethereum.
Mhm.
And they're not thinking about why being a 9 to 10, just trying to optimize an existing system, is not an order of magnitude better than inventing a new category. Like, it's going to be very hard to disrupt Ethereum by just doing a little bit of
Mhm.
optimization. And if you were around in the early days, you watch these narratives play out. So Bitcoin has Litecoin that emerges. Remember, these are, for anyone who
Mhm.
doesn't know, these are open source projects where anyone can go on GitHub, a repository for code, and they can copy the Bitcoin code. They can redeploy it and change around the recipe. And they can rename it Litecoin. They can call it Dogecoin. They can call it Black Coin, Moon Coin,
Mhm.
Feather Coin, World Coin, all things that I probably bought back in 2013. But the point is, none of them really were orders of magnitude better or different than Bitcoin. And so communities didn't rally around them. There wasn't a developer community that got behind any of those assets. And so they kind of just died away over time. The community stayed with Bitcoin. It
Mhm.
wasn't until Ethereum comes about that introduces this idea of this far more flexible and programmable blockchain, a smart contract platform, that a community rallies around it. Because again, it is another 0 to 1. It changes the
Mhm.
game. And I think about this a fair bit because as people say to me, well, Solana is going to, kill ETH, or
Mhm.
Polkadot is going to kill ETH. Those are not 0 to 1s. Those aren't inventing new things. They're just taking an idea that Ethereum had and saying, can we optimize this, a little to the left, a little to the right? And that's not enough to disrupt that community. So I think it's important to think about these assets. And as you were saying, are you disrupting a $100 billion industry, $1 trillion industry, and then think about, are you? The second question to it is, are you an order of magnitude better than your competition, or are you just optimizing what they already have? Because that might give some sense into how successful they may be. Now, of course, it doesn't mean it's impossible, but you really have to be an order of magnitude better than something else to try and disrupt that existing community and all of that infrastructure.
And that's fun. Funny how you said it can obviously order of magnitude and just optimizing your business is really never enough to overtake. And I think that's the same thing with the classic. I mean, even within the HR world, like for most people, good enough is good enough. If it does what I need to do, if you're half a second faster, as a consumer, why do I care? If I don't need it to be faster, I'm happy. I don't want to change everything. I think that's the same thing, especially when I worked a lot in tech. Um, Technical people tend to love that. They're like, hey, we're more efficient. Our streams are better quality. We're a little bit better here. We're a little bit better there. But when it comes to the customer or the use cases, if it's not noticeable, like you were saying, why are people going to switch? And I think switching costs, especially within DeFi, I found quite strong, especially when a lot of times there's a lot of education around it. There's a community around it. You're heavily invested in the community. You have, for a lot of people, some identity connected, whether it be to Bitcoin, Ethereum, even Solana, where you're like, hey, I grew up in this ecosystem. I'm active on the Reddits. I'm active on the forums. To switch over, there has to be a dramatic shift, whether it be in efficiency or at least in disrupting the disrupted again, where it's a brand new way of doing it that is unprecedented or unseen before. And it's hard to predict those because if you knew what would disrupt it, then you would just disrupt it. I think that's also the issue, and people always ask.
Yes, but I want to add in here
Mhm.
that it's not just about cheap and fast, or even a new way of doing things. Let's pretend that there was a new idea that someone deploys on Polkadot or on
Mhm.
Solana. There's more capital that exists on Ethereum. And by the way, I'm not an ETH maxi.
Mhm.
I'm open to all of these other assets, but I want to be measured in how we're thinking about things, because
Mhm.
when I hear people say, well, this place is just going to be, it's much cheaper to do it on Polkadot. I go, well, hold on. It's not just about cheap. Is there an NFT marketplace on Polkadot? Is there the same level of block explorers that
Mhm.
exist on Polkadot? What about meaningful NFT assets? Do they have CryptoPunks and Bored Apes, or they're just building derivatives and ripoffs? It doesn't mean that some of those things can't emerge there,
Mhm.
but you're seeing the real innovation is largely happening in one ecosystem, and then it's being copy pasted into others. And
Mhm.
that is not enough to disrupt by just saying it's cheaper and faster. Because really, what will happen is anything that's super innovative that happens somewhere else will just get, again, copied and pasted, but
Mhm.
back into the ecosystem that has all of the infrastructure surrounding it. And then how do you compete?
Mhm.
So when a lot of people ask me how I'm thinking about the disruptors, I don't really see them as disruptors. I see them as places that are trying to gain some kind of market share by making a bunch of trade-offs, but they're not really competing with Ethereum layer 1.
Mhm.
They're more likely competing with Ethereum layer 2, right? As we're starting to see now, layer 2s emerge on Ethereum that also might trade off a little bit of decentralization to try and get faster or cheaper transactions
Mhm.
through. Why build in another ecosystem?
Mhm.
One angle may be that some of the languages are different. So someone wants to program in Rust, maybe they want to use Java. I don't know. Um, Maybe that's enough, but I kind of don't think so. And I think that what you're going to see, what'll be interesting for all of us to see, will be in this pullback in price as we've watched Bitcoin go from, I don't know, 65, $70,000 down to 30,000, ETH go down.
Mhm.
So, I mean, everything has gone down. Do the people who are building in those other communities remain committed to the ecosystems, or do they go away? And if they go away, the problem will be in the next cycle. The who is going to flock back to those
Mhm.
communities, because now ETH layer twos are going to be live. So it's going to be pretty fascinating, I think, to see where we're at in the next cycle and what the narratives are and how they've changed. My prediction would be that the next cycle will be focused on more Ethereum centric and layer two ecosystem infrastructure rather than competing layer ones trying to gain market share. I think that some of those communities may leave the table here.
Mhm. I think that's a good point. I think for a lot of things, it's exciting to talk about cheaper, faster, but at the end of the day, because community is such a big part of it, it's like building a double-sided marketplace. You need to have millions of users, and if you don't have millions of users, it's hard to sustain through the ebbs and flows of the market. And I think that is one thing that, I mean, even being in a lot of pitch competitions, talking to a lot of new ventures, they're like, we're like Uber, but we're cheaper or faster. And people, and the best question is, but Uber has hundreds of millions of users. They don't have to be the best. They have the bandwidth and they have the ability. Everyone who's developing products will develop it on their platform. So how can you break that mold? And I think that's always hard because it's exciting to look at one thing to say it's better, but at the end of the day, it's a whole market you have to compete with, not just one individual. It's all the other developers. I mean, we've seen with the app store battles as well. You can make a cheap app store, but where you can get the developers for it is the resource a lot of the times, which is
And
always challenging
also
to get.
and also keep in mind that in I think starting in maybe 2019, Tezos was live,
Mhm.
and the narrative was, all right, well, there's on chain governance, proof of stake, and cheaper, faster. Everyone's favorite
Mhm.
bullet point: cheaper,
Yeah.
cheaper, faster. The point is, um, alternatives that were cheaper and faster and proof of stake networks, and this is exactly to your
Mhm.
point, they have been around for a number of years. If people really wanted cheaper and faster, if they were weighing that heavier into the equation of why
Mhm.
build in a certain ecosystem, they would have done it, right? You would have seen in either 2019 or 2020 with Solana or
Mhm.
Polkadot, Near, Avalanche, whatever, you would have seen the users shift. And when you go to a website like cryptofees.info and you see what people are paying daily to use Ethereum, and it's probably on the low end $10 million at this point,
Mhm.
it's probably higher than that. On the high end, maybe it's $50 million a day. That's the market telling you that infrastructure and capital formation and mind share and set of assets, that is more valuable to them than saving a couple dollars on a transaction fee. They're paying for that security and decentralization and infrastructure, and they're valuing it more than moving to another ecosystem. Again, it doesn't mean that that won't happen at some point in time, that they migrate away, but I do think it's pretty telling. And I think also helpful for new entrants to the space who aren't sure where to go, where they should build. And a friend of mine once said to me, you got to follow the developers, because if you have two people shouting at you, right? You've got the VC
Mhm.
who's going to say you should go build on Solana. It's going to be a new ecosystem that can do X, Y, and Z
Mhm.
better than Ethereum. And then you've got a developer saying, well, you should come to Ethereum. Here's
Mhm.
what I'm working on, and you should join this group over here. The way he framed this was by saying the VC is going to be staking 1% of their LP's capital at risk when they make their bets. They're
Mhm.
really not, they don't have that much skin in the game on wherever they decide to
Mhm.
invest. But the developer is going to stake 100% of their reputation, their time, their product, the piggybacking off the
Mhm.
surrounding infrastructure. Um, they're putting all of that at risk basically when they choose to go into a certain community. And so if you want to know who really has skin in the game, look to the developers. And the developers will tell you where you should build, right? They're staking
Mhm.
everything, because it's not just their product. Their product is going to have to be supported by a whole host of other things going on around
Mhm.
them, tooling, all that stuff. And so that is a really easy way, I think, for new entrants into the space to decide where is it appropriate to build the certain thing that they're trying to
Mhm.
achieve, which community is most appropriate. And maybe that is on something like Near. Near has like a few things that it's trying to focus on. Maybe we see blockchains that are going to focus or optimize specifically around gaming.
Mhm.
Don't go to the VCs to figure that out. Look to the developer community where they're rallying around and where they're getting excited as a way to indicate where uh, to best build your
Mhm.
product.
It's so funny how every industry just goes back to talent. Where's the talent? And that is the winner. I mean, if you look at tech, one of the easiest ways to know which companies are doing well is who has the best developers. Because, I mean, if you're a good developer, you can get a job anywhere. So wherever they're choosing, okay, that business is hiring the best talent. They must be the best, whether it be culture or product. And I think in every industry, funny enough, no matter how techy you get, it's the humans behind it that really can navigate the success or failure, no matter how good the white paper is of a project. One thing we obviously touched on a lot is like decentralization, and even a lot more traditional businesses looking to explore it. But they're always with decentralizations, it's very interesting because we've seen some for even some DeFi industries pull back on some to allow for more, whether it be efficiency or a little, at least more to semi some one location for increased times, where other industries are kind of getting more centralization. Where do you, I guess, more in maybe the traditional world or even in the DeFi world, where do you see a lot more centralization coming? And where do you think is the kind of biggest hindrance where maybe a lot of people want decentralization, but the logistics behind it aren't there yet? If you have one top of mind.
Are we talking about crypto native activities or traditional business activities?
We start crypto native because let's especially in the crypto native space. I know a lot of new businesses are trying either becoming extremely, DAO, extremely decentralized, while others are becoming more centralized, especially trying to raise VC funding. Being a DAO can be challenging to get money if the founders can kind of leave to some extent. So, where do you see that? It seems like it's really hot, or at least a shifting market right now around some things being more acceptable being decentralized, where others are a no go. If it's not decentralized, no one wants to deal with it.
I think that the crypto world in general
Mhm.
is struggling a little bit right now to. I'm not even sure if decentralized is the word, but the thing I'm thinking about as you're posing this question is how custody is going to work. And the early adopters of crypto, the people who were there in
Mhm.
2010 through 2016,
Mhm.
17, maybe, I think understood the ethos of this space was to understand that these were digital bearer assets. You were going to take possession of it. You were going to get a software wallet, a hardware wallet, and it would be yours to hold and to safeguard and then interact with protocols direct, if that day ever were to come. But it
Mhm.
was something that you were supposed to take control of. And the 2018 era to now has largely been driven by centralized access points,
Mhm.
ETFs, um, exchanges getting much bigger, people relying on the exchange to take possession of the assets and safeguard it, and that's great for onboarding new users.
Mhm.
It gives them an access point where they didn't feel comfortable with the options earlier on, but it does create risk around centralization. It does mean you're reliant on whatever those custody solutions are going to be, and it moves a little bit away from the ethos of the space. Um, and so I think a fair bit around, in the next 5 years, the next decade, will more users do their homework and want to take possession of these assets, or are they going to rely on, basically banks to custody the assets on their behalf? So we're taking this decentralized network and set of assets and then
Mhm.
putting them into centralized custody solutions. Wallets are still very difficult to use. Hardware wallets need constant firmware updates,
Mhm.
hardware update. You want to throw those things out the window every time you connect it.
Mhm.
The browser-based plugins, um, the extensions are good, but
Mhm.
have still a lot of complexity to them. You see something that says, incorrect nonce.
Mhm.
Okay, what is a nonce to someone who is not a computer programmer?
Mhm.
I mean, those aren't words. Gas fee. These are not terms people use in the real world. And so
Mhm.
if you want to onboard a billion, bunny ears normies,
Mhm.
how do you do that when the lexicon is so bizarre to anything that they've ever touched? So I would love to see in the next 5 years wallet solutions emerge, an education that helps that next group of users move a little bit back towards the ethos and spirit of what these assets and networks were going to be. That's something I think about a fair bit in terms of centralization, decentralization.
Mhm.
In terms of corporations, oh, and DAOs, by the way, are very exciting. But again, if you want a lot of people to participate in a DAO, you need to make the access points and the infrastructure surrounding the DAO accessible to most people. And maybe we're just not there yet. Maybe,
Mhm.
you and I sitting here, or me criticizing it, saying it's too hard to use. Um, by the way, I'm capable, if anyone, is ranting in comments. I know how to use these things. I want to know, how does my sister, how does my mom,
Mhm.
how do those people participate? But I think DAOs are really exciting, but again, we need to make it more accessible. We need clear guidelines in terms of regulation, what tax jurisdiction they would fall in, what personal liability you
Mhm.
would have when you're part of a DAO, what is an appropriate oracle. If you want to
Mhm.
interact in any way with something in the real world, there's a lot of friction when that DAO wants to do something in the physical world, in the meat space world. It's very easy to manage a multi-sig and go buy a
Mhm.
CryptoPunk. That part's the easy one. How does the DAO go buy a piece of real estate? How does the DAO go buy the Constitution? There's a
Mhm.
lot of friction there that needs to be solved, but it's really exciting. Corporations that are thinking about decentralization, I don't think that they fully understand what they're saying
Mhm.
yet. I think that the idea of this is nice. Businesses saying, yeah, we're interested in crypto. We're going to add Bitcoin to our balance sheet or accept Bitcoin as payment. I don't think that they fully thought through what this means.
Mhm.
Do people really expect someone to walk into a coffee shop and pay for their coffee in Bitcoin? I mean, one out of every 5,000 customers might do that.
Yeah.
Um, they're doing it because there was a lot of hype surrounding the space. They're interested in it, but they don't really know where to begin.
Mhm.
So I think that the traditional businesses thinking about decentralization, I'm not that bullish on it, or
Yeah.
just in the short term. I don't really know even what that means or what that would
Mhm.
look like. I think that the industry itself is still figuring out what it
Mhm.
means and what it's going to look like, and what the legal structures or what the legal guidelines are going to be to allow these things to exist.
Mhm.
Regulators are still focused on exchanges and trying to figure out, should they be regulated as a commodities provider, as a securities
Mhm.
exchange? What are these things? they're way far away from considering what a DAO is
Mhm.
considered. Um, so there's still a long road ahead in terms of education and solving these issues.
Yeah, I think how you put it made a lot of sense. I think one of the things we've seen this in other industries as well is that the how it started and how it grows is a little bit two separate things. I mean, same thing with a business at 10 employees or 1,000 employees. You need different styles. I think it's the same for the industry where when there was just very tech focused people, you could have solutions that were, as you see, very decentralized. You doing everything yourself, kind of understanding the tech and terminology. But if you want 100 million users, you have to change a few things. It's impossible to be as complex, and I think that's the one thing we've seen is especially with, I would say it's a trade off, but realizing, hey, for some of our products we're developing, if we want to make them more non crypto natives enticing, we have to make it simpler. I mean, there's a famous example of how Facebook beat their Friendster from MIT was that they just made it simpler to use to get to users, and eventually you can build up complexity. I think we're seeing a little bit of the same with the identity with a lot of the DeFi projects. Is that saying, okay, initially it was all the very techy people in here, but now we have people's moms and sisters and brothers and little nephews entering the space. And even though they're tech native, they've grew up probably with an iPad. Introducing them to the space requires a different level of education that will take some learning till they can get that point where the utopia of a complete decentralization can happen.
And that's one of the tricky things is that the space is not at any point static. It's
Yeah.
constantly evolving. So just when you thought you understood how to use Bitcoin, the Lightning Network emerges that has a bit of a different UI to it.
Mhm.
The addresses are different. So you got to, ah, crap, now I got to learn
Mhm.
this. And then you were comfortable with Ethereum and wait, what's this ICO thing? Oh, okay. Now there's NFTs and the metaverse. I mean, there's just then you thought stablecoins were there, and then wait a minute, but there's a new bucket called algorithmic stablecoins.
Yeah.
What's that? I mean, it's very challenging for people who are not in this rabbit hole reading about it constantly to keep up. And it's especially challenging, or the people I'm calling out here, who I feel sorry for, if I'm even allowed to say that, are regulators who are
Mhm.
trying to figure out what to do with the asset class. And they're dealing with 100 other things on their desk at any point in time outside of this space, traditional equities
Mhm.
and who's filing prospectuses and who's getting listed. And then on top of it, they're trying to understand how a new asset class is going to map to existing laws. And just when they think that they understood, one asset like a Bitcoin
Mhm.
or Ether, then all of a sudden you pile on dexes and
Mhm.
self custody or blended custody or multi sigs, and we don't like cold storage, or we understand exchanges can't just do cold storage. In Canada specifically, this is an issue where the regulators want 80% of assets to exist in cold storage, and then 20% can be
Mhm.
in a hot wallet, something like Fireblocks, like
Mhm.
multi party computation based wallet. And they're wrapping their heads around these things and going, okay, here are the rules, and then the exchanges adapt to the rules. And then it's 2022, and now staking is becoming a thing. And then the exchanges go, what happens if one user wants to stake, a decent amount of
Mhm.
ether, Sol, whatever it's going to be, and they cross this 20% threshold. So these laws are being designed, it assuming that the space, not assuming, but as if the space were static, and then the space evolves so fast that then those rules don't quite plug in
Mhm.
that well
Yeah.
to the existing frameworks, and it's just so challenging. So I don't know what the answer to this is going to be. Maybe it's new agencies are going to get formed. I guess these are opportunities for people who want to educate the normies in the world and create products and services that are helpful for them to access all
Mhm.
of the activities that are going on. But it's certainly a difficult industry to bring to the masses, because I don't know how you do it with the breadth and depth of everything that's going on.
Mhm. And I mean, regulation's always challenging, and especially government involvement. I mean, the internet's been around for many years now, and even the rules around where you can store data is a little archaic and doesn't even make sense. If you're a Canadian business, you have to store Canadian information in Canada, and there's all these weird rules around torrenting, which I mean, 10 years ago, that was like the hot button topic where it's not illegal in Canada, but illegal in the states. It's still not figured out, and that's been around many years. And I mean, I guess for a lot of people, probably their first introduction to decentralization for file sharing, where you could just take bits from other people and develop your own documents from there. But yeah, no, it is a very unique time, especially when people, and the answer to a lot of these things, especially when it's like nobody really knows. You just have to research and see, as like you said, as the industry develops, changing every day. Every day there might be a different answer to the question you're asking. So obviously, a lot of changing in the market. There's a lot of things that are quite dynamic, especially with how the space is evolving. If people want to follow along, kind of learn more about your views and
Yep.
stuff, is there a blog, or kind of how can people follow your story?
Yeah, I can be found through all the traditional social media channels, Twitter, LinkedIn. I'm a big advocate for education in the space
Mhm.
and trying to help as many people as possible understand what's going on. I had a lot of people help me make sense of things and keep steering me in the right direction and away from the noise. So if anyone randomly emails me, I always get back to them, try and send them back an article or a couple
Mhm.
bullet points on what I'm thinking. So anyone can find me on socials just under my name, Brian Mosoff, or
Mhm.
they could shoot me an email at brian@ethcap.co, and happy to chat anytime. And I'm not as active on Twitter, but I'm constantly doing webinars and podcasts, and would love to just help more people make sense of this bizarre world.